Welcome back to the deep dive. It is Wednesday, January 28th, 2026. And looking at the terminal screens this morning, honestly, it feels a little bit like the laws of gravity have been suspended.
Yeah.
The S&P 500 has just crossed the 7,000 point threshold for the first time. And if that wasn't enough to make your head spin, gold just hit an all-time high of $5,150.
It is absolute chaos out there, isn't it?
Right.
But it's that specific kind of market chaos where fortunes are, effectively made or lost in the blink of an eye, provided you don't panic.
Right, and that is exactly our mission today. We know you, the learner, are seeing these headlines. You're seeing your friends posting screenshots of their portfolios, maybe hearing people brag at the coffee shop.
Mm-hmm.
But historically, when lines go vertical like this, when things go parabolic, things can get very messy very quickly.
That's the reality of a market mania. The euphoria is high, but the risk is even higher. So for this deep dive, we've pulled together a really diverse stack of sources to help us decode this volatility. We aren't just looking at news clips. We've got transcripts from a live trading floor, capturing that real-time breakout excitement. We have a technical masterclass on the strict mathematics of risk management.
And a whole series of reports on the Fed and crypto, too.
Yeah, exactly. Breaking reports covering the Federal Reserve, the Great Wealth Transfer, and the shifting crypto landscape.
So we're going to combine macro analysis, specific technical strategies, and the math you need to survive. Let's start with that big picture. 7,000 on the S&P, gold over 5 grand. It feels like everything is going up at once.
It does, and that's what makes this moment so unique. Usually in a standard market cycle, you see a rotation.
Sure, yeah.
When investors get scared, money moves out of risky stocks and into safe havens like gold. But right now, we are seeing a synchronized rally. Everything is green.
And what's fascinating is the disconnect between what the markets are doing and what the powers that be are saying.
You're talking about the Federal Reserve?
I am. We have Jerome Powell, the Fed chair, explicitly telling people not to read much into the rise in gold prices. He's pointing to data saying inflation is broadly tracking expectations and growth is strong.
So he's basically saying the economy is fine, ignore the gold chart.
Pretty much. But the market clearly isn't listening to him. The US dollar is at its weakest level in 4 years. The market is voting with its wallet, not listening to the press conference.
Exactly. So Powell says, nothing to see here, but the dollar is dropping and gold is skyrocketing. Why is this happening?
That's the question.
Why is there such a massive disconnect? One of our sources, an analyst named Giant, points to a massive structural shift happening in the background called the Great Wealth Transfer.
We've heard this buzzword before, but reading through the research, the scale of it is actually hard to wrap your head around.
It is. This isn't just a weekly fluctuation. We are looking at a generational tide. There is a Merrill Lynch report cited in our research that details a shift